You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Bitcoin, Ether, Solana, Doge, and more. Cryptocurrencies and digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments throughout the world's leading crypto derivatives markets. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io. Now it's time to dive into the exploding world of crypto derivatives. It's time for the Crypto Rundown.
All right, everybody. That music means we are back. It is Monday. It is time once again for the Crypto Rundown, the program here on the network where we go a little bit beyond our traditional stomping grounds of your Tesla and your VIX and your SPY and your Apple options. And we see what's going on in those crazy, crazy crypto waters. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are binging these days. Reminding you at the top of the show, hey, if you just subscribed to the Crypto Rundown, you are missing out on nearly a dozen other programs. Make sure wherever you're getting this show that you are subscribed to the full network. And then, of course, if you want to go above and beyond, you want to join us for a pro Q&A session, which probably will touch on crypto tomorrow, as well as a lot of other great content, exclusives. Options Oddity is going to have a giveaway this week as well. Theoptionsinsider.com/pro. is the place to go to learn more. As we learn who's joining us on the program this week, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the program is a newcomer to the show and indeed to the network. He is Sal Ternullo, the co-founder of SovereignAI. Sal, welcome to the Crypto Rundown program.
Thanks, Mark. Appreciate you having me.
And Sal, as we like to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the world of finance and crypto, as well as what the heck it is you guys do over there at SovereignAI.
Yeah, happy to do that. So currently serving as the CEO of SovereignAI, which just last week announced a transaction merging with OceanPal, which is an existing NASDAQ listed public company, with the express mandate to accumulate NEAR tokens on the balance sheet. Prior to my time serving in this role, I was on the venture side for the past 5 years, managing 2 venture capital funds, both early stage, focused on pre-seed and seed investing in the context of both Web3 and AI. And prior to that time was at KPMG, where I ran first their US consulting business, focused on crypto and public blockchains, and then subsequently ran their global business on those topics as well. And then the early days of my career was on the traditional finance side at State Street, looking at emerging technology risk, specifically around machine learning approaches and permission blockchains largely. Finance and accounting guy by background. So I look at this opportunity now really as kind of the confluence of these different chapters of my career expressed in a really, really cool space, which helps to bridge the gap between traditional markets and crypto. And that's exactly what we're doing with SovereignAI, building kind of the first publicly traded vehicle, which allows investors to get exposure to one of the most exciting technologies at the intersection of crypto and AI, which I know is a topic that you and the team have covered to some extent. I look forward to expanding on it with you today.
There's a few hot buzzwords in your press release. I will give you that. Yeah, most of them. You got AI, you've got your crypto, you got your crypto treasury approach. There's a lot to unpack there. But I do like your trajectory there, Sal. You went from consultant, and you got lured to the dark side of venture. Then you got lured to the even darker side of the startup side. So a lot to unpack there. Let's get into SovereignAI, because you mentioned kind of a new venture, a bit of a spin-off from your effectively owning entity, which is a logistical company, a shipping company, which is kind of interesting. We can get into that as well. But let's talk a little bit about SovereignAI. Of course, this is a treasury strategy, and we'll get into all of that as well. Those are very hot right now, obviously. But around the NAIR protocol, so for a lot of our listeners who are not familiar with that, what are we talking about? What is the NAIR protocol?
Yeah, so NAIR protocol is a dedicated layer one blockchain, which has really embodied a bunch of design decisions to allow for a highly scalable system with a great user experience that has really been focused on capturing the opportunity around decentralized AI. So introducing approaches that give you confidentiality and privacy as a user, whether you're a consumer or a business, and also unleashing agents to be able to transact on your behalf in the real world. So when you think about NAIR, you're really thinking about the future of agentic commerce in a world where we can actually control and own the agents that operate on our behalf.
And, we've talked a lot about a lot of different treasury strategies ever since Michael Saylor really kicked it off with MicroStrategy. A lot of people have leapt into those waters. Of course, the first wave was all Bitcoin treasury, saw an emerging interest in ETH treasury. Now it is every altcoin near and far. In general, I'm curious. This is kind of a point we've been talking about for a while here on the network. This treasury strategy is starting to get a little crowded. Are you concerned that being yet the latest addition to this space, that some folks may just say, oh, here's another one, they've just been inundated with these? Or do you think the approach of focusing it around NAIR makes it novel enough to generate some interest with the folks?
Yeah, it's a good question. Like, naturally in this space, which you've seen as well, like, narratives are very hot for a very short period of time. And generally speaking, in the past, those narratives lead to some period of fallout. This space, I feel, after being in the industry for a decade, is pretty markedly different in that it's introducing the rigor around a public company, the transparency, internal controls, financial controls, and bringing them to an underlying asset, in this case being NAIR. At the end of the day, the exposure pattern that people are gaining through these treasury companies is really wed to the underlying asset. And I hold the view, and have for a long time, that NAIR as an asset is one of the most mispriced assets at spot relative to fundamentals in terms of user adoption, transaction throughput, developer community, all the things you'd look at from a fundamental valuation perspective, which in the context of Sovereign gives us this great opportunity to create this bridge to traditional capital markets around an asset which has asymmetric upside relative to those that have really previously caught kind of the narrative arcs of Bitcoin in the case of Michael Saylor and MicroStrategy, but also Ethereum and other household names like Solana. And so quite excited about the opportunity here. And I think some of the things we're doing that we'll dive into are quite different in the context of the broader treasury arc.
Yeah, it looks like your goal with SovereignAI is to acquire at least 10% of the outstanding supply of NAIR tokens. So obviously a substantial holding in that. But also, as you mentioned, this is going to be a public investment vehicle. So folks can also invest in this. And you're also offering an active management component, which for our audience, you hit the buzzwords there of options as well. So there's a lot to unpack there. Walk our listeners through some of the active management components of this SovereignAI investment vehicle. What are you folks going to be doing to go beyond just the investing in the token and then parking the rest?
Yeah, this hits very well. And I think this is part of the reason we are reaching out to engage here, is that ultimately one of the key differentiators between vanilla structured products, ETFs, even in the case where they offer yield through staking, will not introduce the types of mechanics that we are within the context of SovereignAI, specifically on the option side, but also in the context of DeFi participation. So the piece of this that's most relevant to you and your audience is around the options piece. Naturally, in these vehicles, you are directionally accumulating the underlying asset, and over time, aiming to target some percentage of the total supply of the token, in our case, to exceed 10%. The option strategy that we're deploying around NEAR is really focused on the most optimal accumulation around the asset, and selling puts all day, either at the money or slightly out of the money, and facilitating both cash yield generation on puts that are expiring or reacquiring them. And ultimately, if we get called away on those things, we're quite happy to do so because we're driving our average cost per token down, which in context of the total yield profile of the vehicle gives this kind of interesting dynamic where we can play on both sides of the equation, being around the MNAV metric being asset accumulation of NEAR, and then potentially in the future as well, reacquiring shares off the open market with cash yield that we generate to the extent that we need to defend against some of the discount pressures that you've seen from others in this space.
So selling puts to get into the position, we can certainly get behind that here on the network. Is there a vibrant options market for NEAR? Do you have to go OTC? How liquid are these options that we're looking at here?
Yeah, this is one of the biggest changes. And I know you guys have talked a lot about the majors in the context of this space in terms of market depth and liquidity around the option side. But we've increasingly over the last 2 to 3 years really started to see the alt options market mature pretty materially. And so based on the scale that we're operating today and the counterparties that we're facing off to, primarily OTC, we are not at a scale where even at targeting 10% of the total supply, that the markets are not deep enough to surface our demand. And so it's pretty interesting when you compare 24 months ago to today, what these markets look like OTC.
Recently, we were talking about the other side of that coin. You just mentioned it, the counterparty risk, and we saw some forced liquidations just a few weeks ago on some of these other treasury strategies that we've seen floating around out there. Does that concern you, having to rely on OTC, that maybe if things start to hit the fan, the other side of the trade won't be there?
Yeah, it's a great question. And it's one of the key differentiators that we've introduced in how we're approaching sovereign AI versus many others in the market, in that we've internalized the asset management mandate to give us the flexible opportunity to control both the yield strategy at spot, the option strategy around that, but also to design an institutional treasury management approach to manage counterparty risks related to all the venues that we're facing off to. And so you'll see a piece that we'll be publishing as an op-ed in the coming weeks, which really talks about how do you manage, distribute counterparty risk across tier one counterparties based on a qualification framework, and something that I built and deployed at KPMG for folks like Goldman Sachs. So, I think this is one of the areas where, we're competing both on an expense ratio relative to others that's meaningful, but also on a risk basis that is quite different from kind of the standard outsourced asset management arrangement you see in these vehicles.
So by spreading it off across multiple counterparties, you could mitigate the risk of one of them defaulting?
Yeah, exactly. Like at the end of the day, in an asset class where there is bearer risk, and also in some cases, market infrastructure or market structure that has not matured to the same extent we see in traditional finance, you can't take single-threaded counterparty risk, for example, in the custody context, the way that some tier one, multi-trillion-dollar asset managers do in TradFi, where State Street serves as their effectively only custodian for several trillion in assets. In this space, you really want to distribute counterparty risk across tier one service providers and hold them all to the same bar of continuous third-party risk monitoring.
Maybe the answer at the end of the day, Sal, is just to go back to the old school central clearing. We just had CME on the network a couple of weeks ago. They're really stepping up their crypto game. They're going to go 24/7 next year. Maybe you knock on the door of CME and say, hey, you want to list a little NEAR? A little central clearing might go a long way for that, Sal.
It's pretty funny. I was on a panel this morning down at NASDAQ with someone from DTCC, and all these players in kind of the traditional market clearing and settlement infrastructure are really leaning into this space now, specifically around tokenization, but also looking at the underlying crypto assets too.
It does seem like FTX very much created a schism in the space. There always was DeFi and there was traditional finance, but it definitely seemed to solidify people on both sides of that schism now. Some people said, FTX clearly showed the need for central clearing and regulation to eliminate all the skullduggery. And other people say, no, FTX proved that the guy in the middle was the problem and there should be no guy in the middle. So FTX seemed to just intensify this debate a lot more, which I think is interesting, and is kind of where we live on this show, the intersection of all these markets coming together. But let's get back to the sovereign AI and launching this now, because as you mentioned, it is interesting timing, not just for the fact that there are so many people diving into the pick your crypto of choice treasury approach. There seems like I'm sure there's a Shiba Inu one probably launched as we were talking, Sal. That's the approach du jour right now. But also, as you mentioned, the altcoin ETF universe is really picking up. A little over a year ago, it seemed like an open question whether we were even going to get options on IBIT and get a spot Bitcoin ETF. Fast forward a year and change, IBIT is trading up a storm. IBIT options flow is actually starting to rival, if not eclipse, Deribit. So IBIT is the elephant in the room, and people are seeing that. Now we're talking about ETH ETFs and coming out with, Solana and everything else. You're right. The debate now is around the staking. Will they offer the staking rewards to the same level? In this universe where there are a million options, pun intended, out there, Sal, do you worry that folks who are intrigued in investing in some sort of crypto vehicle that maybe has an income component to it, that maybe they'll just say, hey, I'll go to one of these ETFs because they offer me staking rewards, and maybe they'll skip over the nears of the world?
So to that point, I think there's going to be a diverse mix of different types of publicly accessible vehicles on traditional exchange infrastructure that both retail and institutional investors can face off to. There will be a near protocol ETF. I think I heard on one of your prior episodes a discussion around this topic. Bitwise in particular has done an exceptional job covering near protocol in context of an agentic future. And there will, in my opinion, be an ETF, obviously post government shutdown once we come back online here. But ultimately, that's one of multiple different products that investors can select to get underlying exposure to the asset. And in our case, we're very much focused on optimizing the yield profile while implementing the safeguards, both in the context of Treasury that we were discussing, as well as with an option strategy, which will not be something that you see sitting within an embedded ETF product anytime soon. Maybe as we zoom out 3 to 5 years, we'll start to see those things. I think T. Rowe Price just announced an actively managed basket product at spot. But yeah, I think at the end of the day, it's going to depend on the investor appetite for both the underlying asset and the form and wrapper through which they can get that exposure. And in our case, we'll offer a higher yield profile than any equivalent staking ETF, and also this kind of design around how we manage risk within the business. Which you have started to see behind the Bitcoin ETFs in particular, with many of them looking at onboarding, second qualified custodians behind these products, but they're at $100+ billion scale already. We're starting off with $125 million pipe transaction.
I do like the options component, as you mentioned. Let's go back to that really quickly, because you mentioned using the puts to get in, but you want to manage this approximate 10% core holding in NEAR. So if things get a little bit larger, if NEAR grows, and you have to divest of some, will the options component come into play again? Do you facilitate covered calls? So effectively the wheel strategy being utilized down the road in this active management strategy?
Yeah, very much so. So like over time, as we zoom out 2 to 3 years down the road and we reach our target state in terms of size, we never want to own a position within the network that challenges the decentralization of the network itself. And so to your point, we will eventually become sellers of covered calls. If we see wild and exuberant market moves over time, we may be putting on zero-cost collars around portions of the position. We're quite fortunate to have a former JP Morgan commodities trader and market maker in the option space on our team and actually helping to advise and operate these strategies. So I think this is another piece of you really need to bring, for example, Mark Longo in-house to have the right expertise to actually run these things. And if not, you're playing with fire.
I don't know if you can afford me, Sal. You had a nice little seed round, though, so maybe we could get part of the way there. But speaking of that seed round and that initial launch, you are effectively a wholly owned subsidiary of OceanPal, which is kind of interesting. A bit of a pivot away from their core business. They're in the shipping and logistics side. What prompted this? This is a significant departure to spend $120 million to effectively bankroll a near treasury strategy. Well, what prompted all of this now?
Yeah, it really came together in kind of a perfect harmony in that the underlying assets which OceanPal owns today and holds within this vehicle are approaching their end of useful life. So there's a 2 to 3 year time period before they become effectively salvageable from the scrap value perspective. And they're really looking for what is the next chapter and evolution of our business. They also offer this unique design where effectively OceanPal is just a holding company to the underlying assets, being 2 Panamax and 1 MR2 tanker, all of which are in a similar phase of life. And so there's a natural end in sight to those underlying assets and their productive utilization. But obviously, they have the benefit of having a very, very clean balance sheet, no debt to date on either the ships or the balance sheet itself, and a clean record and kind of positioning with both NASDAQ as well as the SEC. And so the bringing together of these 2 different strategies with an overlapping period and then ultimately a pivot to solely focus on what we're doing with Sovereign was a very natural coming together.
Well, this is all very, very fascinating stuff. We have to keep rolling with the show. But before we go, if our listeners are intrigued, they want to learn more. I mean, this all just hit the tape very recently in the last couple of weeks. So maybe let's start there for our listeners. What phase are we in right now? If they want to become a part of this and maybe nibble on this near investment vehicle, where should they go? What should they do?
Yeah, so the website's SVRN.net. Right now, the ticker on NASDAQ is OP. Ultimately will be transforming to SVRN over time. There's a ticker change request underway now. But you can track OP on any of your existing finance apps, and that is the equity through which you can get exposure for Sovereign.
I don't know. OP, it's a great ticker. You might want to hang on to that. First off, not a lot of 2-letter tickers left floating around. And, for a certain segment of the audience out there, OP might have some resonance out there. So there you go, listeners. If you are intrigued, this all kind of just going live very recently, check out OP, check out the symbol change when it goes through. And if they want to head to your website, perhaps, to learn a little bit more or dig a little bit deeper, Sal, where should they go? What should they do?
SVRN.net.
There you go. SVRN.net is the place to go, listeners. And Sal, we appreciate you taking some time out of this launch period to come talk to our listeners. And we'll definitely keep an eye on this, and we'll certainly hope to chat about this and how it's unfolding in the marketplace down the road, sir.
Awesome. Well, thank you for having me on, Mark, and appreciate your audience for taking a listen.
All right, listeners, now it's time for us to keep on rolling. It is time for the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. And let it never be said that we don't bring you fun and interesting guests here on the old crypto rundown. All sorts of fascinating stuff. Just when you think perhaps that crypto treasury of choice, pick whatever crypto asset you want and then slap treasury on the end of it. Just when you think that might be getting a wee bit saturated, here comes a near crypto treasury. But just to add more resonance for our audience in particular, they're adding an options overlay to it, effectively legging into the wheel, selling puts to get in, and then eventually, if their exposure gets too large, selling calls to get out. Going back to what we talk about on Options Bootcamp all the time, at the end of the day, if you can just use one option strategy, the wheel is not a bad one to choose at the end of the day. It covers a lot of the ground, covers a lot of the needs that you have in a traditional portfolio. So fascinating stuff. We'll keep an eye on SovereignAI. But now it's time to see how all things Bitcoin are unfolding in the marketplace. And spoiler alert, the answer for this one is down. We were threatening 116 on our last show, 115,481 to be precise. Coming into the show today, a little over 8,000 handles to the dark side of that, 107,318 down, 8,163 handles from our show last week. A little bit of downside, a little bit of red on the screen. Usually in the traditional equity options world, that usually leads to a little bit more vol on the screen. And that is what we're seeing right now in the Bitcoin space as well, which is, again, kind of showing that that skew is definitely biased to the downside right now. If you're going down and vol's creeping up, that means puts have a bid, and that is the case. So we'll get there in a little bit on the skew side. Let's start in the vol first. Remember, all this data coming at you courtesy of our friends over there at Amber Data, amberdata.io, the place to go to kick the tires and light the fires. If you did that, listeners, you would see the vol indeed getting a little bit spicier. 39 on our weekly vol on the show last week, 43.1 this week, so ticking up a little over 4 points. On the weekly vol, 30-day vol, a more standardized vol metric, 40.5 on our last show, 43.1 today, so ticking up over 2 points out there on the 30-day vol, and then the 180-day vol. The Holdler vol spot was 45.75 on our last show, ticking up slightly there as well, 46.5. Skew-wise, I kind of gave it away at the top of the show. You can probably intuit that from those numbers I was just telling you. We're selling off, vols catching a bid. That means, guess what? We're seeing a bias to the downside in the puts, and that is indeed the case right now. Skew looking pretty bearish in Bitcoin right now. Weekly skew, -2 on our last show, -5.25 right now. So turning to the dark side a wee bit. 30-day skew, same deal, -1.25 on our show last week, -4.25. So giving up a whole 3 points to the dark side since our last show. And even where the hodlers hang out, we've been talking about this for a while. The long-term premium since we launched this show has been biased to the upside. Over the last few months, that has changed. Greg has mentioned that on the show. I've discussed it many times. Now we're swinging fully to the dark side. It was -0.6 on our last show, -2.25 today. That's a pretty healthy bearish bias to our longer-term skew. Let's keep rolling out to some products we were just talking about and maybe becoming the elephant in the Bitcoin derivatives world. This is, of course, IBIT. Just an absolute beast. 60.75 when we kicked off the show, down nearly 5 handles, 4.75 handles from where we were this time last week. The ADV is still threatening 1 million contracts, 954, even if that's down 26,000 handles a day. That's still beating VIX every day out there right now. That is just absolutely insane volume. And again, one of the reasons why IBIT is becoming the de facto leader in the space. 741,000 contracts were on the tape right as we kicked off the show, listeners. Let's see if that number has swelled since we started the show. We're up to 779,000 contracts. So a pretty active day, all things considered. There are not many products out there that can really threaten that type of volume out here, listeners. So fascinating stuff out here. 30-day vol ticking up as well at about a 45, up about 3 points from where it was this time last week, and about a 2-point premium to what we're seeing out there on Deribit, which is kind of interesting. If you're wondering what are the hot options out there in IBIT today, listeners, it's a lot of January lighting up the tape out here this week, listeners. In particular, it's the Jan 70s going up 22,000 times. These are the Jan 2028 70s. So we got some wild flow out here. And against the Jan 2028 95s, those are going up 22,000 times each. So it looks like we have potentially a Jan 2028 70 95 call spread. My goodness, that is a that is a funky one. 22,000 times. Looks like prices of about $5.80, somewhere in that ballpark. That's an interesting one. Would you want to buy a call spread that far out? That doesn't excite me on many levels out here, listeners. If you want a more traditional option, let's fall down to number 5, about 14,000 of the DEES 75s. Those also looking kind of rough right now. Looks like trading for 68 cents. Looks like paper might be bailing on these, though. There is some OI, and looks like they were hitting the bid on these. So someone could be deciding, you know what, 75 by December expiration, a bit of a bridge too far. I'm going to take my 68 cents that I have left and get the heck out of Dodge here, listeners. Interesting stuff out here in IBIT. And again, IBIT threatening a 60 handle. Also interesting stuff out here in Mara. Again, a name we've been talking about a lot on the put selling side on our options oddity shows and others out there. It's been a pretty reliable put selling name and a good wheel candidate. Again, getting back to what we were talking about earlier with our guest in the crypto hot seat. Been a little wild of late, and it has earnings coming up this week, so it's up to you whether you're comfortable with diving in on earnings week, but there is a lot of flow going up right now. 301,000 contracts. The ADV is at 428,000, so that is definitely a pretty active product. Again, 18.15 right now, off nearly $2, about $1.85 from where it was this time last week. And the hot option out there, 32,000 of the 18s, so pretty much an in-the-money call, slightly in-the-money call, going up for 85 cents. And then 27,000 of the Jan 18s going up for about $3.10. So interesting stuff out there. Would you be buyers of either of those, listeners? Are you saying sold to you on those 18s expiring this week? It's a pretty gutsy call to ride through earnings, but we've seen wilder stuff. Speaking of wild stuff, let's go explore it now. It is time to venture into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's get down to business. It is time to explore the altcoin universe. And spoiler alert, it cost you a little bit less to break into the top 10 in market cap this week than it did last week. Last week, we were right around $24.5 billion to break into the top 10. That got you to our old pal, Cardano. And this week cost you about $20 billion exactly to break into the top 10. So a lot of red on the screen this week. That still gets you to our old pal, Cardano. Number 9, it's Doge, $25.5 billion. Number 8, it's Tron, $26.9 billion. Number 7, USD Coin, $75.6 billion. Number 6, it's Solana, back below the 200 handle, back well below the 200 handle. So a $92.5 billion worth of market cap there. Number 5, it's BNB, 137.3. Number 4, XRP, $140.5 billion. Number 3, it's Tether, 183.4. So definitely expanding its lead, or at least losing less than XRP this week. So now holding about a 43 billion market cap lead over XRP. They were battling for the number 3 spot not too long ago. Number 2, it's ETH, 437 billion. And the big dog, looking a little bit smaller this week, it's Bitcoin, 2.1 trillion worth of market cap. Out to ETH we go. ETH taking a bit of a drubbing this week as well, down nearly 600 handles. It was 42.19 on our show last week, 36.30 coming into the start of the show today. If I re-racked it right now, probably would be down about exactly 600. Instead, we're in that ballpark, down 589 handles. A vol ticking up, but ever so slightly in ETH this week, which is kind of interesting. We were at 65.8 on the weekly vol in ETH on the show last week, at about a 70 this week. Monthly vol, 66.5 last week, 67.6. So ticking up, but just a little over a point. And then the 6-month vol, 68.5 last show, 68.25 this week. So pretty much treading water out there. We're seeing a little bit more evolution on the skew. The weekly skew was negative 0.6 on the show last week. That has swung to a negative 7. So that's a pretty strong change. The 30-day skew, negative 0.75 last show, negative 4 this week. So again, looking biased to the downside. The 180-day skew still showing a bit of a positive bias, but it is coming in a little bit. It was positive 2.25 last week. Still positive this week, but down to positive 1.5. Speaking of things that are down, let's run through some of the rest of the names you folks like to play ETH and ETH-related names in, and just the altcoin universe in general. Our old pal, Bitminer, a.k.a. B-Miner, a.k.a. BMNR. Again, one of the many names we've lured Bill to the dark side of selling premium in. Hopefully he picked some judicious strikes this week, because BMNR taking it on the chin, down 11 handles, trading 43.5 this week. The ADV is 287,000 contracts now, down about 6,000 this week. Putting up a little over 200,000 today. Doesn't seem like it's going to hit it. 30-day vol, by the way, if you're wondering, 107% out there. So just wild stuff out there in BMNR. And then speaking of wild stuff, Circle, another one where if you were looking at nibbling and selling some puts, hopefully you like it at these levels, or you chose some judicious strikes, because Circle taking it on the chin this week as well. 119.5. If you're saying that sounds a lot lower than last week, you are correct. It's down a whopping 23 handles from where it was this time last week. It was in the 140 range this time on the show last week. So again, if you're selling puts out here, be judicious out there. 91,000 contracts on the tape today. The ADV is 129,000. That's up about 6,000. So hopefully any of you out there who are selling puts, you're comfortable owning Circle at these levels, or perhaps you rolled them. There are earnings coming up, but not this week. Earnings are on the 12th, so they will be next week. So if you're looking for a little bit of that earnings juice, it's not going to be in this week's cycle. And then speaking of wild moves, It's our old pal ETHZilla, listeners. Just an absolutely ridiculous name out here, listeners. $17.80 this week, down about $2.70. Of course, if you look at this chart over the last few weeks, it's been just absolutely wild, getting all the way up to about nearly $25 and then coming right back down the other side. There were issues with this 1 to 10 reverse split, so liquidity is an issue around the options on this name. You're going to have some vestigial tickers floating around in options, so not something you want to mess with unless you know what you're doing in the option space, but definitely an intriguing beast out there. Only 7,000 contracts on the tape today against an ADV of 20,000, so usually a reverse split maybe gins up a little bit of interest. In this case, it seems to have gone the other way. The ADV is coming back to earth, down about 5,000 from this time last week. Again, sometimes also all those vestigial tickers and everything else kind of gums up the works a little bit, so that could also hit the volume. 30-day vol, 117%. That is literally unchanged on the week, so wild stuff. Doesn't seem like that was that long ago, and it wasn't, that we were talking about trading the 2.5 straddle in ETHZilla. It wasn't that long ago we were talking about 25 straddle, now down to 1780. The absolutely wild beast. So we can add ETHZilla to the list with MSTU and all the other products that are solely for the degenerates in the audience. And then let's run down some of the rest of the altcoin universe and what we got here for this week. Solana, like we mentioned earlier, taking it on the chin this week. 202 last week, 167.70 this week, down 34, almost 34 and a half handles from where it was this time on the show last week. So not a great week for the Solana bulls. On the flip side, if you missed the re-nibbling, a lot of people did, south of 150, and you were lamenting it last week saying, man, I missed my Solana. Well, maybe this is your next bite at the apple if you think we're poised for a little bit of a turnaround. If you think there's more downside to come, well, then you could just wait and buy it at a lower level. Of course, XRP, same deal. 269 on the show last week, giving up 34 cents down to 235. XRP wearing it this week. Sad week, obviously, in the Ulibarri household. Doge, 20.5 cents last week, a little bit shy of 17 cents this week, 16.9 cents. That puts it down about 3.5 cents. Litecoin, 101.94 on the show last week, 88.04 this week, down $13.90. Cardano, 68 cents last week, 55.8, so down a little over 12 cents on the week. Polkadot, 320 last week, 260 this week, down 60 cents. And everyone's favorite, Uncle Mike's largest crypto holding, Shiba Inu, 1 million zeros, 1059 last week. This week, 1 million zeros, 0928. So once again, no Shiba Lambos for anybody. All right, that is going to do it for us on the crypto rundown for this week. I want to thank our guest, Sal Ternullo from SovereignAI. Remember, check them out if you are intrigued. That ticker symbol, OP, kind of an interesting one. I would hold on to that if I was them, but sounds like they're in the middle of a ticker change out there. But in the meantime, if you are intrigued, OP out there right now, that is the old parent company of OceanPal, trading $1.36 if you are intrigued. So if you think you're getting that on the old logistics company, you might be in for a rude awakening. Or you might be very intrigued now that instead you're getting a crypto treasury play with an active options management overlay onto it. So a very interesting pivot on this one. We'll keep an eye on this one, listeners, see how it plays out. And of course, you know where to go if you want to check out things in the crypto derivatives world. Amberdata.io, the place to go to kick the tires and light the fires. That GUI is completely free. You have no excuse now. So make sure if you're trading any of these products, you want to check that out. Amberdata.io or pro.amberdata.io will take you where you want to be. Now, speaking of where you want to be back here in about 45 minutes. A new kickoff here for the Hot Options Report. Gonna add some new wrinkles. Should be a fun time. Make sure you're checking that out. If you're hanging out in the pro, that'll be coming at you instantaneously. If you're hanging out on demand, of course, just hit next on your device of choice. Yet another reason why you should be subscribed to the full network. Back again tomorrow for all of you pro members with our good buddy Uncle Mike tackling all of your questions. I'm sure we'll touch on crypto there. So that should be a fun one. Back again with the rest of the week with our usual array of content. Till we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
The Crypto Rundown is brought to you by Amber Data. If you're entering the digital asset class, you'll need access to granular on-chain and market data from multiple venues to power research, trading, risk management, and compliance. Amber Data delivers comprehensive data and insights into blockchain networks, crypto markets, and decentralized finance, empowering financial institutions to apply traditional finance methods to digital assets. Amber Data eliminates the infrastructure setup, integration challenges, and maintenance headaches to access digital asset data, reducing cost and time to market to enter the digital asset class. Learn more and download their digital asset data guide at www.amberdata.io.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.